Good morning. Ron Janish here. It is 7:13 here in beautiful San Diego, where we have what we call the marine layer. It's our morning air conditioning system. And at about 70 degrees, yeah. So it's the 9th of August, and 7:15 or so is about 45 minutes after New York stock market open. Okay, give you a frame of reference because chances are you're from a different geographical area. Okay, so I have up the what's called the soy meal chart, and the reason I put up the soy meal chart is because that's the only place there's been any activity this week that I can see that was worth noting, uh, where we got in and got out of a trade. So I'll show you why we took profits this morning. Okay, as you can see, price just shot up right past the MLH. Just a really great place for taking profits when they shoot up this fast. And this was pretty darn fast. And so the result was, since we wound up getting in over here and getting out over here on a per contract basis, it was around $1,000. And today, between the close yesterday and where we got out today, only made about $312. But it was a nice quick trade, and it was the only thing that happened in the whole week in terms of a closed out trade. But this video is about what to expect. And when you're trading, and this works for trading in general and trading with Andrew's techniques, there's times when trade comes up and you take it and boom. And sometimes you're in there for a long time and sometimes you're just out quickly. Okay. And there's other times when you really need to bite the bullet. Let me explain. We have something called stimuli hunger, and that's where on an individual level we want things going on, something that keeps our attention, things like that. And so as a result, sometimes people are out there looking for trades and maybe taking them that aren't really appropriate to take. So I'm going to give you an example of avoiding stimuli hunger this week, of avoiding giving in to stimuli hunger, giving in to the temptation. Okay, because it's a good thing to avoid. Let's move over to looking at what's going on over in Forex. Now, if we go to newlazy.com, newlazy, NEWLAZY.com. Boom, there we go. This is the project. This is Lazy Leo, and I'm going to show you what he's been up to, and this is really, really relevant to trading in general, whether you're trading stocks or bonds or futures or whatever. As you can see here, during this time period, he was talking about only taking trades or focusing on trading when you have three in a row. And all he's really saying here is when you have, in this particular case, the focus was on the New Zealand dollar. So if you look here, he had New Zealand dollar on the right-hand side with the -10, And over here he had the New Zealand dollar on the left-hand side with a positive 10. And that's pretty much the same as a New Zealand dollar on the right-hand side with the negative 10. Okay. So what he's saying is when you have three in a row, or you have three of those at one time, when you're focusing on currencies, the probability is real high that you'll have a win. Okay, so he had to win there. And then he went up to July 2nd. And after he got out of his New Zealand dollar, things began to focus. Things began to shift. And they shifted into the Japanese yen. Now look at all these negative 10, negative 10, negative 10. And then it says on the JPY on the right-hand side. And so he's sitting on positions in JPY. See there, he's still got them on. Still got them on. Right? A couple of weeks later. Boom, boom, boom. Okay. And slowly those positions come off. When do those positions come off? You still got them on. Look at this. Ay, ay, ay. Well, okay. He finally here, and 3 weeks later, it was time to be out of Japanese yen. And there he was out. Now, what happened was he shut down and he went away on vacation. He went surfing, okay, for a couple of weeks. Now, it wouldn't be right to post on the blog here what positions he could have taken during that time period, because I looked over the markets and he acknowledges his system could have easily, which is Andrew's base, by the way, could have easily taken on British pound and done really well in that. But he can't post that. And so what you need to know is that if you're going to do trading, you need to understand that when you go on vacation or go away for a while, or that trades are going to come by and they're not going to be available for you to take if you're on vacation. If you're truly on vacation. Now, if you're doing the stuff on this trading on the side, which I used to do, that would be different. That's not a real vacation. So the moral of the story is it's really important to go on vacation and to not say, gee, I would have had this trade or whatever in your communication with others if you are only showing real trades. Okay? So, and now he could have theoretically gotten in on those British pound positions when he came back. But the problem with that is then he would have had incredibly higher risk, because normally it's a good idea to enter a position when you're at a risk point that's reasonable, not at some crazy point when you can really fly. Right? This is not the time right here. Look at this chart. Look at this picture here. This is not the time to get on the surfboard. All right? So if you look, he's this whole week, he's looked at several different things, but if you notice, quantity, 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 quantity. He hasn't put anything on. And the reason is because he doesn't have that combination of high probability in terms of a trade and the reasonableness in the risk. That's pretty important. So, as a result, nothing went on this week in the currency batch. Will something go on next week? Yeah, probably. He'll probably be looking at putting on some trades, and he might have some. And he might even have a new currency pair to focus on. We'll have to wait and see. So I'll see you next time. Thank you. Have a good week, and bye-bye.